when you have seen, obviously, the Fed say, oh, inflation is going to be transitory, and, they're supposed to be the ones that know more than anybody else, and then it wasn't transitory, and now they're raising rates, right, into potentially a weakening economy here. Now you have to start thinking, is the Fed going to potentially overdo it in this situation, right? And they're going to keep raising rates, thinking that's going to magically help inflation get down when, rates can control some things, but it doesn't control everything when it comes to that inflation proposition. And maybe we get into a situation where they raise rates so much that they crash the entire economy, which is already in a weakening place. You're just like adding fuel to the fire, right? And so this is obviously very worrisome, I think, for everybody in the financial markets, because when you see a president say there's no recession and Fed say, oh yeah, we're not going to have a recession, it's just going to be a challenge. You kind of got to get a little scared in those situations. Folks' wealth in the crypto space is just being completely wiped out. And, obviously you got situations like the Celsius situation, which, the people that had their money invested through Celsius, they don't even know if they're going to be able to get that money back as of right now. And it's causing a bunch of drama in the brokerage space. And, Sam over there at FTX is trying to save a lot of these companies from going under, essentially. But we have a whole liquidity crisis, essentially, in the crypto space right now. And it's bad. It's causing brokerages to go under. It's causing hedge funds that are in the crypto space to go under. It's ugly. It's on par with what we saw in '08 when you saw massive bankruptcies and you saw, some of these firms go under that you just couldn't have conceived of going under, right? The AIGs, Lehman Brothers, like going into the Great Recession, no one ever thought Lehman Brothers was going to go under. No one ever thought AIG was going to go under. And these massive institutions that people just thought this couldn't happen. And now we see this playing out in the crypto space where you got these, companies going under and people are like, am I going to get my money back? Graham, my neighbor over there, I think he said he had 6 figures invested with that Celsius. I don't know if he's going to see that money. I'll be honest. We'll see. I hope for the best in that situation, but we don't know. And so it's just, this is just, and it leads to another problem, and another problem. It's just dominoes falling the wrong way. But it's not just crypto. That's just part of this story. Stocks, it's the same exact dang thing. Just maybe not to that extent, but look at year to date of Meta. This is one of the biggest companies in the world. One of the biggest, most powerful companies in the world. This stock is down 54% year to date. And this was not even a high-flying stock going into this year. That's the craziest part, right? Look at Netflix. Netflix, one of the most recognized companies in the entire world. This stock price is down 70% year to date. That's devastating. Nvidia, one of the largest corporations in the entire world, over $400 billion market cap, has lost over 45% of its market cap year to date. Look at that. I mean, so if you had 100K in Nvidia, now you got 55K. And you're like, dude, this is one of the biggest companies in the world. Like, how am I losing money like this? This is insane, right? PayPal, 62%. Your 100K is now 38K if you had that going into this year. In PayPal, man, year to date. And once again, this isn't even close to the peak of PayPal. If I would have pulled up like a peak, it looks way worse because PayPal actually peaked at like $300. And that goes for all these stocks. Like if I would have pulled up the peak to where these stocks are down, it's much worse than the year to date. So I can promise you that. Look at Shopify's year to date, 75%. Now think about this for a moment. This is really big for everybody watching this. Think about this. Imagine going into this year, you were on margin. And you're in, Meta and Shopify and Netflix and these sorts of stocks, right? Which have been the stocks that have performed phenomenal for the past decade. And so you're going into this year margin. You've gotten so many margin calls, your account might be done now at this point because Shopify dropped 75%, Meta dropped over 50%, PayPal dropped 60-something%. And you were, it's not even like you were going in some, super speculative, crazy stocks or something like that. These are some of the companies that have done the best for the last decade, are recognized around the world and are actually great companies, great business model, but you've lost so much. And if you went into margin, your account's like pretty much done now at this point in time. And that's just, it's sad to think about, but it is what happens in the financial markets. This doesn't happen very often, but it happens, every maybe 5 to 10 years, you got to expect something like this to happen. Sometimes it's more of like a 12 to 15 years apart, right? You look at something like CVX, Chevron. Now we have the oil and gas companies starting to fall. So oil is starting to fall now. Chevron is starting to go into a bear market. I mean, this stock was $180 not that long ago, like literally just a week ago or so. And now Chevron's $147 just in a snap of fingers. It's not the only one. If you pull up something like an ExxonMobil was 105-ish or so. Now it's $87. You know, the stock had been performing really well until the past week or so. And now it's going down, down, down. Shell, look at this baby. This was up to almost $62. Today it's 50. That's a, you know, what, a 25% drop in a very quick amount of time. Now, when it comes to oil, everybody, it's just good and bad, okay? Good and bad. So first thing is we need oil to go down. That's just bottom line. If we want to try to even avoid a massive recession, we need oil to go down. We need, honestly, all commodities to start going down and down and down. This is something we do need, okay? Now, on the flip side, if you want to talk about the bad of this, usually oil price sinking like this is signaling that we're likely going into a recession, essentially. And if you've seen how almost every single recession plays out in modern times, oil usually is spiking super high as the economy is weakening. Very similar situation to what we have right now. Economy slowing, weakening. Oil's been spiking high. And then as oil starts to come down and down and down, the economy continues to get worse. You continue to go into a recession and then a deeper recession. And eventually oil does hit a bottom, but you know, usually it doesn't signal best thing. A rising oil price usually signals a strong economy, and a falling oil price, especially dramatically, usually signals the economy is weakening. And you know, every once in a while, different situations can happen that can be different than that, but that's usually how these things kind of play out. And so, you know, I think it's like you want to get excited about oil prices going down, but you can't get too excited because it's like, oh man, this is probably signaling that the economy is going to get much, much worse. But honestly, at the end of the day, we need oil down. We need all these commodities down.